Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the hourly chart of gold in front of us, and as we can clearly see that gold is trading, I won't say that inside a range right now, but yes, gold seems to be okay in uptrend, but the uptrend is not that powerful. As we all know, there was a sharp fall on gold a couple of days ago. After that, gold is showing signs of recovery after making a low of 2325. Okay. At this moment, if you look at the chart of gold carefully, technically the market is in uptrend. Why? Because we can clearly see market forming higher highs and higher lows. But if we compare this, we can see that in comparison to this selling force, this upside is very weak. And if we look at the market sentiment, you can see gold ticks lower as US rate cut bets ease. Gold edged lower to hell near 2360 per ounce on Wednesday as investors continue to reduce bets on US Fed rate cuts this year, following recent remarks from Fed officials while awaiting for the key PCE inflation report. So this is the ongoing market sentiment, and market is mostly waiting for Friday's PCE report. On Thursday also, or tomorrow, we have a news coming up, initial jobless data, but market is mostly waiting for PCE inflation report. So we can expect that though the market seems to be in uptrend, we can expect the market to remain within the range only till tomorrow or day after tomorrow. Okay, so you need to plan your trades accordingly. In my previous video also, we have discussed that if you're a positional trader, if you're planning to take a position on gold for a couple of weeks to a couple of months, then obviously you should be looking for buy position and at a good retracement level like 2300. And it is better to wait till Friday. If market drops after PC data, you can look for a buy somewhere below this level here. Okay. And if it doesn't come down, then obviously you can buy on the middle of the chart as well. Let me take you to the 4 hours time frame. You can see this is the ongoing scenario here. So obviously 2300 is the best support in front of us, but the problem is that 2300 is far away. So let's not talk about it. If market drops, then obviously day traders, swing traders, positional traders all can look for a buy around the area. Now let's talk about this particular portion of the market. So the volatility is going to play a major role. As we all know, if price is the king, volume is the queen. And before a major event, PC was not a major event like CPI, but yes, nowadays PC data is also getting a lot of attention. So before PC data, if market remains like this, then you can expect the market to respect each and every level, because when there is less volume in the market, usually market bounces or reverses, because to break any level, okay, because to break any level, volume is important. If volume is missing, usually market, okay, just bounce from the support or reverse from the resistance. Probably you have also seen that during the Asian session where volume is low, market usually bounces from the support, reverses from the resistance in from small levels also. But in US session, the volume is more, so market most of the time breaks the support or breaks the resistance because volume is high here. So here we have the low of 2325, okay, the blue line here. So if market surprises everyone with volume, then obviously you can look for a buy above this. And by tomorrow, if you see that gold is going below 2325, obviously we can look for a sell below it as well, because our ultimate support or the strongest buyers are present around 2300. So if market bounces, we can look for a buy from 2325. If market breaks 2325, suppose you see the market is going down, market is going standing at 2325 with a big red candle. What does it mean? It means sellers are in control. In that case, you can look for a sell below it, below 2325. But the problem is that 2325 is also far away from the current market price. In that case, especially during the Asian session and European session, you can look for temporary bounce of 30-40 pips around 2340 and 2334. These are the two levels that you can only expect to work when the volume is low. For example, Asian session and European session to some extent if the size of the candles are like this. How we have derived this level? Here we have used FIBO, and we can also see the previous market is also showing support around this area. You can see we have FIBO 78.6% retracement level plus support. Here you can see we have support plus FIBO 61.8% retracement level, but minor level. So we are not expecting a complete bounce because fundamentals will be important more. So here you can expect a quick bounce if market comes to this area. And before this, we also have a quick level around 2350. Okay, if market comes down, then you can also look for some support around this. I won't say support, okay, you can look for quick bounce because support is a different thing where we have strong bias present. So the three levels that I mentioned right now, 2350, very weak level, but if volume is low, you can expect a bounce of 30 pips. Then we have 2340, 2334 that we can expect to work as for quick bounce only for day trading purpose. If you're a swing trader, positional trader, no, these are not the levels for you. If you're a swing trader, still you can look for a sell below 2325. If you're a positional trader, you need to wait for the market to bounce because gold is fundamentally bullish, so you need to be on the buy side. Okay, hopefully you understood these levels here. Now let's talk or discuss about these three levels. So if market goes up from here, okay, the previous high is around 2364. Okay, so if market breaks 2365, the previous high here, okay, we can look for a quick bounce, not quick bounce, we can look for a buy and breakout not more than 40 pips. Usually I tell people that when the market is an uptrend, you should ride the trend of the market, but here the situation is a little bit different because if market breaks 2365, okay, after 2370 market will enter the seller's territory. Okay, seller's territory, so it's better to be on the safe side and book your 40 pips. Why? Because if I draw FIBO from here, you can see previously market respected our FIBO very well. Then we have FIBO 38.2% retracement level around 2373. Okay, where the previous support is also acting as resistance. And moreover, you can also see the 200 moving average is also coming down. So if I combine all the factors that I mentioned, then it really seems to be a strong level. Yeah. So if market hits 237375, we can look for a sell position, both day traders and swing traders. Okay, because if not a complete trend reversal, at least we can expect some sort of temporary downside, and yes, we can expect to make some money. That's why once you will go for a buy above 2365, you need to be extra careful because once market will hit 237071 area, sellers will try to reverse the market. Okay. So you need to be careful, and that's all from my side, my friends. Hopefully you understood that. Okay, as we have low volume in the market right now, it is safer for us to trade from level to level only. Okay, if you do not like to trade from level to level, then okay, I'm sorry, but okay, we all have our own ways to survive in the market, and this is my way of surviving in the market, where the market is waiting for a major event or news. And right now, okay, the market is not ideal to ride the trend because we do not have a clear trend. Technically, the market seems to be an uptrend, but we can clearly see in comparison to this is a very weak trend. So let's wait and watch. Till then, stay safe. Bye bye. Take care.